that's what I'm doing. I'm going to go pick up a boat.
I'm going to make a request that you also get like 2 or 3 GoPros on at all times while you guys are in that boat, because I guarantee you something hilarious.
Comedy gold.
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's Jon Prishmann. Well, John, today I dropped my son off at the airport, and he is now officially a Marine recruit being paid by our government. So it's going to be an interesting 13 weeks as he goes through boot camp here.
Yep, that's a big day. That's a big commitment. Yeah, I'm sure he's excited and probably a little nervous.
I would say in the past 3 days, there's been some serious swings both for him and for our family.
Yes, I would think that's normal for every one of them.
Yeah, he's super excited, and I'm excited to go to San Diego in 13 weeks. So yeah, 12 weeks, I guess, when he's done. So I look forward to the updates. That's for sure. I'm sure he's got a exciting training camp ahead of him. Oh man, I would not be looking forward to going through what they get to go through, but he is 18 and I'm not.
And it's going to probably be different than a senior in high school. I would imagine there's a little different culture there.
Right. I will say when he was being sworn in, the officer that was doing the swearing in ceremony said, when in 4 to 5 years, when your commitment ends, you guys will have a large head start over your peers who are just going to college.
Yeah, especially the way the kids are now. They seem a little softer, maybe. A little feelings hurt a little easier than even when we were growing up.
Yeah. I know your favorite app is Twitter, and I was reading on it today about how much failure to launch or how long kids are staying at home right now. And I did want to reply and say,
I got 3 at home.
Stayed at home less than 2 months after graduation.
Yeah, in the 20s, I got kids at home in the 20s and not far away from the 20s, and it's a full house again. It was empty for just a little bit, but like a boomerang, they're right back.
Right back.
Free food.
Free food. Yeah, I mean, I'll take free food, but it is interesting. Our generation, I think I was at home for about 2 months and left. I wanted my own place. I was out of there.
Yep, that was me. I bounced back a couple times briefly, but it was off to Colorado and many other adventures, which I think is good for a kid to go and see what's going on.
Well, we got to, at some point, share some more on your adventures. I mean, we want to talk hedging, but you do have some great adventure stories.
We'll slip in some of those. Oh yeah, there was all over the world. We'll get a story every once in a while for sure. Yeah, I have to start telling them before I start forgetting them.
Right. Well, okay, so you were with Disney on Ice, which is almost the Marines.
Yeah.
How many countries did you visit, though?
Oh, a lot. A couple years in Europe. A lot of countries. Some got canceled, like Egypt got canceled, and then some of the Middle East countries got canceled. But then we did make it to Israel. I never made it to the Japanese tour, Japan, and the Southeast Asia. I kind of regret. Those were the ones that everybody really likes. You work really hard, but a lot in the United States, in Puerto Rico. A lot of spots, and I gotta start telling those stories before I forget them. They'll start fading here soon, I suppose, and we'll hit one of those every once in a while. Interesting ones. There's some funny ones.
I like it. Well, let's start then talking about other countries, talking about the Marines. There's been a whole lot of political news since we last recorded.
Yeah, I follow it, for commodities, but I'm already tired of it. And it's, July 21st? 22nd? Yeah, and it's a long ways to go. And it affects the markets, but it's hard to tell how. Everyone's going to have their own opinion on that, of course, as well. Even the Trump situation, you can read it two different ways, that the phase 1 framework is there on the trade agreement, even though it expired, I think, December 21st, 2021. So they obviously don't have to follow it, nor have they been following it. But are they going to go right back to that? Or is it going to be a big trade war like we had in 2018, 19? It's hard to say, and I'm already tired of thinking about it or speculating on it. I think you just take it day by day, see kind of where the politics land on it. It will affect the markets, but both sides are going to be talking a lot, and I think it's already not going to influence the market much anymore. I think, what do they say? Trump said they're going to do 60 to 100% tariffs. I mean, it's hard to go higher than 100%, so that's already out there. Biden had been working on some new tariffs against China recently. Is that going to continue? I don't know. I mean, I have no idea. I don't think anybody knows. Usually the price swings wild, though, on political happenings, not necessarily the presidential, but like ethanol and Congress and the biofuels in Congress. Generally, highs and lows are on political stuff. So we probably will see a lot of that in the coming year and a half, depending on what direction they go with biofuels. Is there going to be trade wars? So it will influence the price. I'm just already tired of it.
I like it. I think we're all probably tired of the entire political process right now, but the reality is it does affect prices. There are things, and maybe for no real reason. And so being aware of it is important.
Yeah, it's more than ever. You have Russia, the stuff going on in Russia, and it's like they feed the world in that region. So energy and food's becoming political weapons. So it's tying in, unfortunately, more and more. Always has. It'll get quiet for years, but now we have a number of things happening at once where it'll influence it quite often. It can make for a very tricky environment. It's been tricky for the last 3 years with these floating type policies, like here one day, gone the next, that influences energies one day, and the next day they kind of backtrack on it. So it's been tricky that way already with basically no policies that I saw, no clear energy policies, no clear anything, which that's not what you want in trading, to go back and forth if you're affecting the prices, with the direction that you're going. Like it's going to be all electric cars by 2032. Then the next day there's pushback. You can't just make that law. The president can't, so you get this back and forth. It really annoys me. But it's influencing commodities a lot, and it has been, and it will continue in the days ahead. I don't think it's going to be real predictable, and that's where I probably lose my interest. I'd rather have something predictable that gives a guy an edge that we can make money off of, and I don't think that that's the environment that we're going into. I would say it's going to be more short-term negative than positive for prices. But again, you go on Facebook and you're going to see people read it completely different. But that is what makes a market. One guy's going to be right, one guy's going to be wrong. So I hope to toe the middle and just pull the information that's important out and apply that in a good way. I mean, that's what I hope to do. But yeah, it's been swinging wildly now on all the stuff that's been happening.
Have you been following the dollar at all? A general question, and then I have a deeper question on that.
Yeah. I mean, it's super important for commodities. It's been stuck in that 105 range for a long time. I think it's 104 something, so it's above par, which is going to be 100. And that's going to be something that you need to watch, and the new policies, and obviously the debt, which is talked about by a lot of people quite often. And then you see these little things on Twitter, like 76% of all income tax receipts are going to go to paying the interest on the debt. So I don't even know if that's true, but they put it out there, and then everybody starts reposting it. But it is going to get to where the numbers don't work very good for us. We're quickly headed that way. It's stuff that all the doomsday guys have been predicting for a long time, but now math is starting to work against us at this higher rate, and you're going to need a lot more money coming in and no bumps in the road in order to service this debt. So that's probably going to be a very interesting stuff. A lot of people think the dollar is going to go down with the new policies, if there's a new administration, that they're going to pursue this weak dollar policy, which they've said, the vice president, potential vice president has said recently, but they don't get to make all the rules either. They can say what they want on the campaign trail, but they don't get to snap their fingers and weaken the U.S. dollar. Again, a lot of these, in politics, they act like they can just pass whatever they want to pass, and they make all these promises, but it doesn't work that way. But yeah, the Trump administration with J.D. Vance, they look like they want to pursue a weaker dollar, better export program. But again, you don't just snap your fingers and get what you want.
So my deeper question on that was, if you can expand, what does a higher dollar and a lower dollar, say 104 and 92 or whatever, how does that affect specifically grains?
Okay, so the cheaper the U.S. dollar is, the cheaper our grain is. Pretty easy. So the higher dollar really affects the corn and mostly the wheat market. That's what's going to be most sensitive. Beans, China's pegged to our U.S. dollar, so it's more of a constant. It's got a free flow to it to some degree, but it's more of a constant rate for them. And then the Brazilian real against the U.S. dollar is another big one. So we've been high and they've been low, and that's why our exports have been suffering for a couple of years. But if that were to go down very quickly, like on the highs in corn and ethanol in 2008 and everything, I think the dollar was 74 cents or 72 with George Bush Jr. in there. And then oil was 150. So you want to find that balance where you have good exports, but you can't make your imports so high that all costs go up for everybody. So you want to find that balance. And that's what a lot of these Bitcoin people don't understand. They think this is a currency, and it's not. In a currency, you don't want rapid appreciation. And you also don't want volatility, which it has a lot of. So they're completely off on this being the new currency. You don't want a currency that goes up and up and up and up in value at all. Now, I don't know what it is. It's a product of some sort, whether it has a place and it's worth whatever dollar amount they say it is. It's not the currency they think it is. For right now, it's just, essentially a way to hide your transactions, a more direct peer-to-peer deal. And, I'm sure a lot of people use it to hide money and money trails. So it's very useful utility for that. But how long before the U.S. Government clamps down on that money laundering and everything that goes along? Unless, of course, they're using it themselves, maybe they won't make any loss. But it's this idea that it's some sort of currency and you want all this appreciation. It isn't the case. You can't sell cars in Bitcoin, sell $30,000 car, and then the next day Bitcoin's worth $20,000. You're going to go out of business right away. So either you have to hedge that risk. You just don't need wild fluctuations in a currency. So the U.S. has been really stable, the U.S. dollar, and it's been hurting our export market for sure. So if that were to go down, I would say corn is going to be probably the market that benefits the most quickly.
Sure, that makes a lot of sense. Let's talk about corn. We actually had a green day. I read earlier it's the first green day, the largest green day since June 10th. I don't remember exactly what I read now. But,
baseball statistics. I'm sure. I'm sure we broke some sort of record today.
We broke out of a trend line and we hit the 50 day or something like that. And
7 black crows flew out of the barn on if you're a candlestick pattern guy. No, I'm just kidding. No, there's always something. This is a pretty normal move. What have we been now? Near 10 days in a row for soybeans. Like, we're going to get a bounce. So we got a warmer forecast, and notice I didn't say warmer and drier. We have a warmer forecast, and that was enough to get, the ball rolling the other way. And it looked very good. People get way too wrapped up in daily price movements. You see it all over Twitter. You want to make sense out of the markets, so a guy that sounds like he knows what he's talking about on a daily move like this, just throw out broke a trend line, or, you can make it sound like you know exactly what's going on. It's just an up day after a lot of down days. That's the way I saw it. A real simple up day, one of the better looking up days, but when you sold off as much as it did, your bounces can be pretty good in the summer. So when I looked at the seasonal chart right before we started here, there is no clear pattern on this date for stuff. What's common is August and September lows. Not common is July lows. Now, it can happen, but it's more likely to make a low in August and September than it is in July. Usually you sell off quite rapidly in July, which we did this year, and then you see another nice bounce. So that's what I think is happening, but that's just my personal opinion. Warmer in the forecast, but I don't even know anybody that's in trouble as far as moisture goes. We were in trouble since May last year, all the way through the summer with some brief rains in July, and I don't remember much in August. I mean, maybe I'm missing the rains that fell in August. But I remember beans being really warm and dry last year in August, and the market didn't seem to care, and it ended up being a very good yield. So we're in much better shape going into August this year than last year. Here's what I call the weather. Summer got here. It's like 5 degrees warmer than it would the average would be. I don't see a big deal in the whole thing.
I mean, we already talked here. It is July 22nd. How much heat unit conversation have you heard so far?
You heard that a little bit early, and stuff was behind it. Yeah, in my opinion, I see what you're driving at. It's probably going to benefit the crop, honestly.
Right.
Corn sure looks like it's past pollination for the majority of the U.S. It didn't get pushed at night. I see ears around here. We're in west central Minnesota, and, if it's going good here, you got to think south is even better, you know what I mean, as far as being along. So corn is not going to be able to get damaged too easy yield-wise from here on out, where beans still can, and that's why beans had all the strength today. So the big question, in my opinion, is, are the funds going to use this low to cover some shorts and make it like a meaningful bounce, or are they going to dig in and it's just going to be a 1 or 2 day deal? I don't know. I definitely have plans for trades, though. This bounce, I was hoping for to provide some opportunities. And, so I'm going to be using this bounce without a doubt. I was already on the phones today, and a lot of guys give up if they don't get the high. And I'm telling you, you're missing out. There's lots to do, and it usually bounces around pretty good in the summer. And, so I'm going to use this bounce to get the stuff that I missed to get back on, or the stuff I got out of earlier. I'm going to probably reapply some of that stuff. So that's that. I'm busy. I like these bounces.
Are you looking bear spreads, puts? What? I mean, is there a specific strategy? Both or bull spread? Are you bull spreading?
No. That's pushing it. Bull spreading. No, I haven't been bull spreading, but I've been. It didn't work in beans today, so I'm glad I wasn't. I had been lightly in beans earlier, but I don't think the bull spreads in corn work very good. Some of the deferred ones did. No, I don't play it that tight. I usually lean on one side and don't try to catch both sides. So I've been on the bear side of stuff, but I'm pretty wary when they pushed it down as much as they did, as early as they did, that you could get a pretty good bounce out of there. Everybody likes to make this seem like something crazy is happening in any given year. You see this. What's happened this year is totally normal. You look at the seasonals. We sold off maybe 2 weeks earlier than we normally would have. It's following the seasonals perfectly. Now, the problem with the seasonals now, though, it gets real sloppy, especially for soybeans. You see a lot of different looks, a lot of different years. Not too many do you go up and sustain a rally. That's exceedingly rare. Last year, this was the highest it got for a very long time, I think a year ago today. And it dropped off from 1350 down to 11-something 50 maybe by harvest. So a year ago today, it was just making a high. After it had sold off, another secondary high. So there's a lot of different looks. There's the seasonals are pretty sloppy from here on out. But what is common is an August or a September low, not a July low.
I happened to look at my notes on seasonals today, and I just what I track on prices, and I traditionally just the last 4 years is all I've kept track of my own pricing. But this has been a very positive week for wheat. The last 4 years, randomly, it's been not so good after that. But for whatever reason this week, whether it's fund repositioning at the end of the month,
it could be commercial on the commercial side of stuff.
Yeah,
harvest is probably has to do with harvest and commercial stuff. They're not going to tell you. You can just only read the patterns that they leave. They're not going to say, "Hey, heads up, we're going to be buying a lot of these commercial contracts back. Make sure you get along ahead of us." And they try to help you out. That's ridiculous. No one's ever going to try to help you out in commodities. Just kind of remember that, unless you have a good guy that you trust that is experienced in the markets and you find him somehow, then those are the guys that are going to help you. No one's going to go out of their way to get an article to you to help you to market better. So you just kind of try to recognize the seasonal patterns. This happens in energies a lot. Again, these guys that need to make these moves aren't going to be advertising, to get ahead of them. So it's a dog-eat-dog world in commodities. Always has been. It's never going to change. The middle guys want to make more. They don't want to make less by helping, the guys under them. So you just try to figure things out yourself, and that's how you survive it.
Makes sense. On that note, what are your cattle thoughts this week? I saw they actually green today. It was a long week last week of bouncing around and going nowhere, I think.
Yeah, the futures, cattle markets, it's trading the future. It's not trading today, because if it was, it'd be going higher with the cash. So cattle can be tricky. It can be the future cattle or it can be today cattle. And they've been trading the futures. They're looking for the seasonal sell-off, and they've really priced it that way. The problem is it hasn't come, and cash is hanging in there. So all of a sudden, this $12 discount to cash looks awfully cheap, and futures, floated up early today. You'd like to think that could continue and get closer to cash, but futures don't have to. You can just have a abnormally wide basis that is quite common in cattle. It has not been common for over a year and a half in the bull market. It's actually been a hedger's paradise. It's been carrying premiums, but now we're carrying discounts. Makes hedging on the board very difficult. I think we topped out maybe late August, mid-August last year, and then it accelerated in September. I wouldn't be surprised to see a similar pattern this year, as a lot of cattle, it makes sense as they come off grass, there's more for sale. But it's just heavily discounted to cash, and that's the way it's been trading, which makes it for a pretty tricky market to get involved in. I'd favor the long side over the short side if I was going to be in there, but I haven't been in there lately.
So do options influence that at all? Like the August cattle options expire in 11 days. It's 39 days for the contract to expire. Will they keep it down? Is that an actual thing? They're trying to keep it down till options expire, and then...
I wish it was like feeder cattle where that option expired at the end of the month. Then they'd be great tools, because the cattle expires at the end of the month. Feeder cattle options expire at the end of the month with the feeder cattle contract, but live cattle is usually the options at the beginning of the month, first notice day. It would be nice if they went to the end, because then if it's a super underpriced market, call would be the easy choice. But like you say, there's 3 weeks after that where it can fall. So that, call looks like the easy choice now, but it might fall short of the window when it actually goes up. And that's not uncommon in cattle at all, to be way away from cash, and then in the last 2 weeks catch up to cash or get closer at least. That's kind of what this looks like it's setting up for. Now, you can be long cattle futures in the delivery process. When it's this heavily discounted, the odds that you get delivered against are very high. But two things: you should know what you're doing if you're going to go in the delivery process with a good guy that knows what he's doing, and then knowing what it would cost to redeliver if you do get delivered against. Here, I believe the fees are $400 per contract to redeliver it. I have never been delivered against. I've definitely been long, well past first notice day, but it goes in first come, first serve. So the oldest dates get delivered first. So if you got a fresh contract, the odds at a $12 discount are not high. Now, I'm not recommending doing that at all. You definitely want to know what you're doing if you're going to do that. A lot of firms might not even let you do that. But with this big a discount, that might be a play a guy looks at. But it's, we still got another week and a half before we're even at first notice day. So,
well, and that's a good point. Just at commodities in general, you need to know those dates. You need a guy who can tell you those dates, because unless you're going to go research every contract you're trading yourself.
Yeah, it's a bad idea. And grains, and it generally doesn't do you a lot of good to hang out in grains. I can't tell you how many phone calls I got to make as we go into the big first notice days. Like July just passed. Thank goodness there wasn't very many longs. I've had a definite opinion on the direction of the market, so I didn't have so many to roll over. But it's a very common, and people like to hang out to the last day. And boy, that being long, that generally doesn't help you, unless if you're in bull markets, it certainly can. But these bear markets, hanging on to the last day has been punishing. I have no idea why guys like to do it. I have some guys that on the commercial side of stuff, we talk and tell stories and have a pretty good laugh. They go through the same thing at the elevators, just where people just hang into the last minute. And I think it's just a psychological thing. Like, at that point, you have to make a decision. Am I going to stay long and roll it, which is very easy to do? There's a fee involved, whatever, a very minimal fee here. At the elevator, it might be more. I have no idea. But, so it gets this, that corners people, and I don't think they like that. So they tend to wait till last minute. Like if you were in high school and you waited till last minute to study for your test, that's what you get a lot of here. They just don't want to make that decision. But generally, that doesn't help you. unless you know there's not going to be deliveries and it looks like a very strong contract, you'll be worse off for waiting to the last minute. But cattle's unique, where oftentimes it's way under the price and it's very unrealistic they're going to deliver. Also, it goes to the end of the month, where grains usually are 12 days into the month, and it gets thinner and thinner every day. You can do it in grains as well, as long as your firm lets you. But again, it's a lot easier to get delivered in grains than it is in cattle. Like, there's heavy deliveries generally in grains, and you can easily get delivered against in grains. And then I've had some guys hang out in Minneapolis wheat too long. That gets to be an awfully thin market as well. So you really have to know what you're doing and have some sort of plan if you are going to be going into deliveries.
For listeners that are newer to the markets, just quick definition of thin. You're talking there aren't many buyers and sellers.
Yeah.
So if you're selling, right?
Yeah. So if you got a number of contracts on it, there's not much of a market there. And let's say you're short and it's a big up day, there might be very few offers for you to even get out on, especially in the wheat markets. It can get real thin in there. Very, very tough market to get out of that. And you essentially have to pay up a bunch. It's going to be a real bad deal for you. So, how I avoid that? I just don't go into deliveries, and that's how I avoid that. Is there opportunity there? Absolutely. Is it predictable? More often than not, no.
I mean, we're talking in grains to roll a penny or less.
Yeah, yep. And I know some places where they roll, it can be upwards of 3 cents. So it can be a costly roll, but I think it's more the decision that they have to make that they want to put off to the last second. Because I know I'm making phone calls to the last second. And then, I usually give them a day or two heads up. Here's what we need to do. Thinking like, hey, today's going to be the day they do it when I call them. But no, I'll call you on, I'll call you in a couple days from now. And, they'll never change. I mean, this is the way it is.
Then they get busy watching their heat units and forget to call you.
Yep, that's what happened. Forget to call me. I'm sure that's what happened. Yeah. No, one way or another, it gets moved out. Yeah, you don't want to stay long into the deliveries or do you get delivered against. And depending on the firm, you might not even have the facilities to take delivery. I get a lot of questions on gold and silver deliveries. And yes, it's possible to do it, but you got to read the whole process. Like, I believe it involves security, picking up in a secure location in Chicago, and then having your own security and all kinds of stuff. There's a lot of a lot of strings attached to a lot of this stuff. They don't want to make it easy. Again, the guys in the middle like to make a lot of money. They don't want to. They're not going to tip the scales to your advantage. I keep saying that.
Right.
If it was me, I would love to see a ton of delivery points where we can get that price around here and deliver it against it. I think that would solve a lot of the problems around, and more delivery points for cattle. I think would be real beneficial to making the markets match up with reality a lot more. If they don't, the guy that has the corn says, "I'll take what I see on the board here, and I'll truck it down to Minneapolis if I have to." I think a lot of people would do that. They just don't want you to.
Yeah. I don't even know. What do we have in grain for delivery? I guess stick to corn, soybeans. How many facilities are there?
I don't. Obviously in Chicago. Yeah. And then there's a couple other ones like for oil, it's Cushing, Oklahoma. And if we had storage back there, 4 or 5 years ago, they'd have paid us $80 a barrel or $50 a barrel
Absolutely.
to take the oil. And I wish I would have been smart enough to get some storage at Cushing. So it just depends on the commodity. Not all commodities are delivered. Lean hogs is the lean hog index that settles against the index, and you could stay into the last day, and then it just goes off the board. Okay. And settles against that price. So you never have to get out long or short.
Settle.
Yeah, you can stay. So it really depends on the contract. Again, this is not necessarily you need to know it all. The guy that you're talking to should know all of it. And if he doesn't, that he should be able to find out for you very fast.
Yeah.
I've definitely gotten waking up in the morning with a call out of Chicago saying you need to get out of this US dollar index right now, or you're gonna have to come up with the money. So you learn things real fast when you're in deliveries, and what you thought sometimes isn't the way. But Chicago usually lets you know when something bad's going to happen.
Sure, usually the key word there, because you do need to be careful.
Oh, I'm paranoid on Fridays. I always go on Friday. I double check the deliveries just in case someone slipped an online order in there. right at the last second on last trade days. Also, old orders floating around in there with some stops maybe on some July contracts. So I have filters where I look for July contracts or I look for corn. I'm always I'm very paranoid about that because, I don't even want to say it. If I say it, then I'll jinx it. So, it's gone well. I'll say that. Or I don't know the process and I don't want to. But no, it can happen. You can kind of, even with the safeguards in place, you can definitely have an old order that you forgot about get filled. I've seen many orders that I've had in there that I forgot about get canceled on the last day because they just automatically, at where we're at, cancel them, meaning like they won't let you have it even if it were to fill. And I've seen some bad fills on orders that were forgotten. Usually it all gets fixed, but you got to be careful. There's always something.
Well, and I mean, that would call it insider talk or inside the trade, but we've seen options get, instead of expiring, they post the option, and you got to watch those, and they're good at fixing them eventually. But when you
problems pop up with options, you want to watch that. You had that happen to you where they way out of the money got exercised on you somehow, and you were down 16,000. I think that wasn't real, but. Again, if we would have called, I don't know, it would have eventually got fixed. And then there was one time I learned it wasn't a delivery. It was when the pits were still around. It was electronics and pits. After the market closed, there was a woman client. She wanted to get out of a couple bean contracts because it was going to be warm and dry. And I didn't know you can get out after the close. If you can get someone to agree on that price, they'll take it. Now, that's gone. But at the time, she was pretty desperate to get out, and I was very pleased. Well, after the close, someone was willing to take that other side of it, a pit guy, and then it opened up quite sharply on that Sunday night, so it worked out good. But I discovered it that day. I didn't know. There's always something that you learn every day.
He probably did.
He wasn't happy.
He probably took that Vegas trip though. What did they call that?
The O'Hare. Yeah, the O'Hare spread.
The O'Hare spread.
Bet heavily in one way. If it doesn't work out, head to O'Hare.
Yeah.
It's he was probably headed down to the bar. He's probably feeling good about his weekend. He's a couple more contracts, something like that. But it worked out. But I had no idea that even existed. After the market closed, you can get out of positions. I don't believe that exists anymore, though. I think that's done.
I would guess so because there aren't any pits left. Is there anything that trades in a pit anymore?
The euro dollar was hanging in there for quite a while. I got a big picture on the wall of the old bond pit. No, I think it's pretty much, shut down or near shut down. Maybe some option pits are still around.
No, all the computers do it, and they move corn however they want to move corn. And
I really liked it when it was a mix of the two. I felt like those were the best markets because if you had a bunch of size, you could get it done on the floor. With the spreads I did at the time with a couple different clients, and then it can be harder on the screen. You just had the best of both worlds, and I really like that. I think a lot of people did, but no, everyone's greedy. They just want more, and everything's electronic now. And kids nowadays, they don't want to talk to anybody. They just want to go to their phone and press a button. I don't think that works very well on commodities, but that's what people want. You know what I mean? That's what the younger generation wants.
It locks up one middleman to make a whole bunch more money.
Well, and in this business, I just don't think you can take out the middle guy with experience. Yeah, I'm going to be biased. That's what we do.
Right, we are part of the middle.
But still, I still liken it to a new poker player going to the Las Vegas locals table and deciding he's going to play with them.
Yep.
And that's what I think a guy going online by himself with little experience he faces in the commodity world. It's a dog-eat-dog world that always has been. And more guidance is better than less guidance. But you also need to find good guidance. There's a lot of bad stuff out there too. But I feel like I got great job security. But again, more and more people don't want to talk to their mortgage broker or their insurance guy, and get advice. They'd rather just go to the general online and get their car insurance. You know what I mean? It's just the way it works with. So it's gone that way in commodities. But what would happen is you're going to get more headline trading, more computer trading, and then it's going to be not to where it's not going to be accurate to what the contract should be. And the whole point is to use it for hedging. So if it's not accurate, that's not what you want to see in a market. Just it's a gambler's paradise, but it's not good for hedging, and that's what the markets were meant for.
Absolutely. Well, anything else to add today, Jon?
No, I'm gonna go buy boat. It's a little duck boat. I probably shouldn't. It's going to end up in the backyard and just in a collection of boats I already have.
I'll borrow it October and November.
Yep, the river's calling. I need something better than a canoe. I'm going to start tackling some rivers, getting out in there in the wild. So that's what I'm doing. I'm going to go pick up a boat.
I'm going to make a request that you also get like 2 or 3 GoPros on at all times while you guys are in that boat, because I guarantee you something hilarious.
Comedy gold.
Oh, man.
Yeah.
I've been on a river with you, and I know things happen.
Probably both cameras will be at the bottom with no way to retrieve them. It would be the way I would bet.
Yeah. Take them. I want to see it. I'm going to buy you one, I think, just we can post video on the Hedge Heads YouTube or something.
I haven't got bit by a snapping turtle yet, but I'm for sure going to. Like I see them swimming by all the time. You keep on hanging out where they're at. They're going to get you eventually. If you're from Minnesota, that's like the Jaws here.
Yeah.
It's the only thing that can bite you in the water is a snapping turtle.
What happened to your toe, John? Well,
lost her back in 2024. Yeah, no, the old snapper is going to get me one day.
Perfect. Well, not perfect. Hopefully that doesn't happen to you, but at least you can still sit here and work without a toe. So how do people get a hold of you?
218-731-1578.
Thanks, John. Have a great week.
You too. All right. I'm ready whenever.
All right. Don't do whatever you just did. Did you bump the table?
No, I didn't touch the table.
Oh, weird. I don't know what made that sound.
I want to be silent like a ninja. Don't worry.
Oh, do not hit the table.